Everyone, welcome to Smart Investing. So the three stocks that I have for you guys today that we will be going over are ticker symbol SNFCA, ticker symbol CFFI, and ticker symbol SNV. We're going to start off with the first one, ticker symbol SNFCA. For this stock, it is at $8.79. Sorry about that. And looking at the first page, market cap is at 191 million. Volume is at 50K. 52-week high and low, difference of about $4. Doesn't make any sense for that. Earnings are pretty weak. But that might be standard for a $1 million company. Price to book is pretty low. So is price to sales. It's telling me it's undervalued. PE ratio is at 8.17. Just telling me that is undervalued. No dividends. So I don't really have much to work with this company. Doesn't have good numbers. Looking at the chart, last 5 years, obviously 2021 was a good year for everyone. 2022 started to go down. We consolidate and start to pick up again here in 2023. Let's look at this fake rally. You can see here it dropped, then all of a sudden it picked up again. And it actually increased its new high for the year. So it's getting there, actually. It's right close to it. So we're going to see what happens with that. Highest rating is value. So obviously, stock is really cheap. Overall rating, 1 out of 5. I don't particularly agree with that. I'm just going to go right into the cash flow. So they pretty much have negative cash flow by about 7 million, but even though they can use their net income and offset their losses with that gain, so they'll be positive. But then again, eventually they want to use cash flow separately from their net income. ROE remains flat. ROA remains flat. ROE is pretty choppy. Last 3 years it has gone down. Net margins are low as well, and the debt is actually not bad. The debt is actually not bad. It's way lower than most, actually. It's probably one of the best I've seen, to be honest, compared to any other banking sector stock. So what else am I missing? I think that's about it. So for this stock, I'm going to say no. They just need a lot of work. You know, they got to bump up that market cap up. And again, hopefully they can develop their own system to cover their own cash flow. Moving on to the next stock, ticker symbol CFFI, also known as C&F Financial. Volume is at 23,000. Market cap is at 190. 52-week high and low. Differential of about, I don't know, $20 to be exact, or a little bit more approximate. I'd say about 18. Now, earnings are pretty strong, really strong for a market cap of that size. Dividend is at 1.76. Dividend yield is at 3.2 approximate. PE is undervalued. Price to book slightly undervalued. Price to sales, I forgot what number is standard, but I'm still showing you guys that data just in case you do use price to sales. So we have here the last 5 years. Looks pretty flat from a price of about 49 bucks. It has gone to 55 just recently. But again, sometimes what goes up must come down. It definitely went right above the 200 EMA just recently, but that's definitely a really big move up. And we want to see something here. So highest rating was value, obviously because the stock is cheap. Moving on to the financials, it's not showing me anything. We're going to jump right into the cash flow here. Yearly, there we have it at 90 million for operating, 411 negative. So negative 411 million. So we're still looking at about, excuse me, negative 300. So 80. So they're about negative 220 million in cash flow. It's weird. Their earnings are that high. So what gives? I want to see what their magic is. What's going on here? Earnings have been slightly going up. Margins, I'd expect them to be a little bit bigger for them to be gaining that much. And they gotta be doing something. Gotta be doing something interesting. Let's read a little bit about it, but again, I'm gonna say no to this stock and see if I find any information while reading this, if I can uncover or discover any certain business practices in this profile. So they do just checkings and savings deposits, as well as business real estate development, mortgage, home equity, and installment loans. A wide range of residential mortgage loans. Consumer finance segment conducts its activities, which provides automobile financing through lending programs. So they also do automobile lending, which makes sense. So you're doing pretty much homes, construction, and all that. So these are all big purchases, which I get. But the earnings just don't match up. I just don't get it. Just don't get it. I don't know how and why they are that expensive, but then also they're earning that much. There's something fishy with this stock. Something very, very fishy. I wouldn't be surprised if they're cooking the books, or lack of a better word, doing some kind of accounting manipulation, because from what I'm gathering, the numbers just don't add up. If the volume was more, maybe the market cap is pretty low, but for them to be earning that much, yeah, I don't think so. Something very fishy is going on with this stock if they're reporting those numbers. So obviously I'm going to say no. with a very strange business going on, some kind of monkey business going on. So moving on to the next stock. And last one is SNV. SNV, $30.62. Market cap is at 4.5. Volume close to a million. PE ratio at 5, close to 6. Price book under 1. 52-week high and low. A difference of at least 10. So that checks out. Decent numbers. I like what I see. Earnings are at 5. And I'm going to move on to the technicals right here. Still below his 200 EMA. And right there we have that. Then moving on to the quants. 16 analysts. That's an insane amount. So nobody said sell. Everybody's saying buy. I call bull. Highest rating for the quants is 7.11. Overall rating 4 out of 5. They rated that strong. I'm gonna disagree with that, like always, because this might be old information, but still useful. Moving on to the financials and diving in a little bit deeper. We have here earnings that were beat in Q2. Fast forward Q3, which was beat. They met expectations in Q4. In Q1 of this year, they beat those expectations. In Q2, I would assume if they did 4 in a row, they will beat it as well. So obviously you can see the estimates have been lowered ever since Q4 of 2022. Moving on to the annual estimates here and numbers. We have earnings staying flat, assets staying flat, net margins looking pretty good. Net income we have here about the same within the last 2 years. Revenue about the same the last 4 years. The only drastic change was from 2018. So not much of a difference. This company likes stability. I can definitely see that. I don't see any growth. Everything is just staying the same, which is not a bad thing, but it's not particularly good as well. I mean, consistency is good and stability is good, but that can only go for so long. I think, especially in the public market, after 5 years, yeah, there's something that has to change, and something's got to give investors, some kind of interest, some kind of liking towards the stock so they can be invested in it. So looking at the cash flow, looking here, negative cash flow. So let's see, we have about, let me do the math. So that was 6, 7, 8, 3.8. So about $1 billion in negative cash flow, which is not good. And I'm going to say no to that stock as well. So no to all these stocks. And again, this one is really, really fishy, really, really weird. And I didn't even have to look at details into like any expenses or any accounts receivables and payables. I don't even have to look at all that. Just by experience looking through that, yeah, this company is definitely having something weird going on in accounting. So anyhow, thank you guys for watching. I'll see you guys soon. I'll make one more video. I'm gonna have some dinner and then I'll be back to make one more video. Again, thank you guys again, and I'll see you guys real soon.